Hi, welcome back to the show. Hope everyone's having a good week. So I want to talk about price structure, and I want to build on what we've been talking about over the course of the last month. So the goal of this show has been, especially for the beginning part where we're talking about these little lessons that I do, what I've been trying to do is explain how to use multiple time frames together and in a way that allows you to have an understanding that each time frame has its own trend, has its own momentum, and has its own support and resistance. And so I want to delve a little bit deeper into price structure and show you a specific example of how it can be used in 3 different time frames, and one to help with the longer term trend, another to help with determining whether you're in a correction or not, and then the third for entry purposes. So let's go ahead and get into the agenda for today. And again, I want to talk about price structure. And so when I say multiple time frames, I'm basically looking at a monthly, a weekly, and a daily. Now, this can be done in any time frames that you want. If you want to use 3 time frames that are much smaller, you can do that. The one thing I would suggest to you is that the smaller the time frame you go, especially if you go down to a 10-minute or less, you're going to be subject to a lot more noise. The movement in stocks as you get down into those micro time frames does have a little bit more noise associated with the trends and all. I find that the weekly has probably the smoothest trend that can be traded. The monthly is actually outstanding at determining a lot of what we're going to discuss. It's just very hard to trade off of a monthly chart because the swings take so long. So if I'm looking at this, I really like using the monthly, weekly, daily as a combo. And then again, as I mentioned, I want to make sure you have an understanding that each time frame is telling you something different about the trend, and they'll be in different positions at the same time. And I'm going to show you that in a second. And then I also like to use the price structure, and in the way I'm going to show it today, I'm going to use the zigzag because I think it's pretty clear, and use that in conjunction with the moving average signals. And I think once you have an understanding of that, it can be really helpful in terms of confirming or refuting what you're seeing on those on that side of things. So, and then we're going to get into the analysis of the individual stocks. Before we do that, let me just take a minute and say that my research can be found at rabilstockresearch.com. And, you know, the goal of the show is to really analyze your stock picks. What my research does is provide, these are my stock picks. So I'm going through thousands of charts looking for the stocks that I think look the most attractive. And so that's really the idea behind the research. If you just so you know, if you're interested, I am offering a discount right now for $50 for the first 2 months. If you plug in the coupon code StockTalk, you will get that the first 2 months at a discount. Let's go ahead and get into the chart, and the chart that I want to use today is Sony. So this was the last stock that we discussed last week. And when I looked at this, I just thought it was a perfect example of how we can look at price structure in multiple time frames. And I thought it would be a lot clearer if I put the zigzag on. You can do it without. I do it without now. But I think in terms of explaining this, I think it'll give you a much better understanding with the zigzag on. So let's start with the monthly. And if we notice, so what I want to zero in on are this pullback here and this pullback here. And that really is this pullback on this time frame right here, and that is this on this time frame. So those are the areas that we're going to isolate today. And what I want to show is if you look at this simple pullback on a monthly chart, and the reason why I call it simple is it's all you did was you made a high and then you pulled back in a straight line. There's no zig in here. There's no ABC down, right? It's just a simple pullback. No complexity to the pullback at all. And also notice as we look at the moving averages, notice how they're rising with the 18 and the 40 rising at about the same rate. And both of the pullbacks came right into the zone while both moving averages kept rising. So these simple pullbacks on a monthly chart, if we go and look at what's taking place on the weekly, we're actually getting an ABC pullback where you come down, you rally up, and then you make another low. And in this case, this was a very marginal new low. In this case, the reversal and turnaround was like the midpoint of the move, so A, B, C decline, but they're both telling you the same thing. And what it's telling you is that this is a correction in the move right now. It's not a full-fledged reversal, because a full-fledged reversal would have 2 lower highs and 2 lower lows. And I actually look at the lower lows as being more meaningful in terms of switching the trend. So if we're moving up and a stock comes down, let's say it's moving up like this, and then it comes down and makes a lower low, and then makes a lower high, and it comes down and takes out this low here, that to me is a pretty confirming evidence of a change in trend. The other way it could take place is if you come down, make a lower high, lower low, and then another lower high, lower low. This would also be confirming evidence of a change in trend. But in both of these cases, if you notice, if you just make a lower low and then a lower high, that doesn't confirm any kind of a reversal. In the same case here. And so if we look at this, we can see that the moving averages, so the 18 has crossed down below the 40 here, but we don't have any confirming evidence of a shift in trend. We haven't come in the zone and then had follow through to the downside. And so if we look at that from I find it interesting because I talk about using this as sort of like an opposing trend, the moving averages. And if the 18 crosses, if the price moves back above the 40, that would be kind of like a trigger that says that this trend is getting back in line with this trend. And if you notice, if I draw a horizontal line here, that's almost exactly at the same price at where the 40 is. So we're getting evidence from the price action, which is that we can't make a second lower low. Instead, we're reversing back up and taking out the prior high. And when we have that sort of evidence, it's sort of like a failed bear. It looks like we're reversing. We've got like a bear alert in place, and then it fails to the upside. And that's the same thing that the moving averages are saying. It looks like it's rolling over because the 18 is below the 40, and that's supposed to be negative. But when you reverse back up through both of those moving averages, it's a counter trend move that is actually going back in line with what we're seeing on the higher time frame. So I've got a simple pullback on this time frame, and then on this time frame I've got an ABC decline in both cases. Now if we go and look at these on the daily chart, we can see that we clearly were in a bearish trend. Lower highs, lower lows, and just continued to move lower and lower. This, we had a high, went to a new low, and then rallied up, made another new low. So here would be like the confirming evidence for me that we've shifted the trend on the daily back to the downside. Now, if I know that this trend has turned bearish, but I've got a lot of support on the higher time frame, I know the trend is up, I know the moving average is up, then I'm not going to get overly bearish based on this decline or these declines like this, these sell-offs to the downside on the daily chart, because I'm looking at what's going on the higher time frames. And I'm also want to use this with this as well. So these are the types of things you want to use. If you have 3 time frames and you're looking at the price structure, you can get a really good sense of what's going on. So what I actually want to do here is I know I've got an uptrend on the monthly, and I know I've got an ABC decline on the weekly. So I want to go and look for a shift in trend on the smaller time frame. And in this case, you broke the trend line, you came down, made a higher low, and then turned back up right about here. That was pretty strong confirming evidence that we were shifting the trend back to the upside. In this case, it was actually a little bit delayed. It was more like up in this area where we got the higher bottom, right around the moving average environment, but we did have a zero line reversal develop with low ADX. So we've got sort of the confirmation on the lower time frame, they give different, sometimes it's a little early and sometimes it's a little later, but having that confirmation, I think, is a big plus to have. So I hope this makes sense and gives you a little bit better understanding of how we want to use these three timeframes together. Let's get into the individual stocks now, and let's see if we can find a little bit more of this confluence amongst them. Okay, I got my regular setup now with the 4 charts without the zigzag, but I have Sony still in place. And I wanted to point out, if you notice what's taking place now, so the last two we went through, this looks more complex, but in reality, it's just it's really just a corrective pattern. It's just taking a little bit more time than both of these pullbacks. So I think this still qualifies in the same, it's in the same situation as it was in the previous two pullbacks. We need to see, I think, we have a low ADX condition on the daily chart. I think we need to see a breakout above this area to get things going. That would be kind of like the trigger in my mind that suggests that this is really ready to get going. So I just thought I'd bring you up to date on this. This does look pretty good. Louisiana Pacific has gone through a pullback on the monthly chart, and we can see during the pullback on the weekly, we actually broke the 18-week. And what's bothering me a little bit about this is that we just turned the 18-week down, and now we're trying to bust right back down through it. We've got MACD kind of going the wrong way, and ADX just dropped down under 25. So I would be inclined to believe, based on the strength we're seeing, I think what's going to happen is it's going to work up a little bit more, and then it's going to pull back while the 18 cups around like this. This is really what I would be looking for as the next, I think, the next buying opportunity in this range. So, it can play out in any number of ways. And yes, it's possible that this will just keep going to the upside, but that is to me more of a low probability play. It doesn't mean that it can't happen, but I play the probabilities, and just based on the velocity of the decline, I would be looking for some type of a setback as sort of the next potential opportunity in this one. MATX. And so this one actually went through the proper pullback where the moving averages came together before it got going. And despite the fact that this is separated away from the 18-month line, we've got really good momentum conditions in place, and it did correct for about 3 or 4 months. So I think this is in pretty good shape. This also had the low ADX condition where the breakout would have been coming up back through here. That was kind of the trigger back to the upside. Now we're back to this old high, and as I've said in the past, I prefer to scale out a little bit, kind of notch myself a win. If I got in this range in here, I want to sort of notch a win and, take partial profits and then see how this wants to handle this area up here. I'm of the opinion, based on all the conditions, that this is going to keep going for now. The next target I have is up in the mid 80s, but something to watch. It might end up hesitating a little bit since it broke out. It hasn't really pulled back or paused. OGE, let's look at the weekly chart on this one. You had this huge decline to the downside, and we're coming up on the midpoint of that decline, which is right up in this area, say in this 37, 38 area. I actually like what's going on since the gap finalized and bottomed. We had a high here, another peak here, and another peak here. We were making sort of like a, you could call it a rectangle or somewhat of a ascending triangle, and it looks like we're trying to break that out to the upside. We've got ADX confirming this move. So I do think there's a push to the upside coming, but I think it's going to get a little bit more difficult as you get up towards 40. So it's a type of thing that I would probably look at it more as a short-term trading play at this point, just because there's a little bit too much upside resistance, overhead resistance up in the high 30s, maybe closer to 40. Snap-on, I think looks good. Big breakout here on the monthly chart. Nice velocity to the upside, but notice how this came down. Let's focus in on the weekly again, because look at what happened. You see these two big red bars to the downside, and we broke the 18-week, and now that line is rolling over. Now, I know based on the momentum, this has good momentum characteristics, and the monthly does as well, that there's more upside likely coming. The problem I've got is I think this 18 and 40 want to spend a little bit more time working together. I mean, I've mentioned this before, but when we get this situation where the 18 rolls over, I'm more inclined to believe that it's going to take a little bit more time. And we can see it on this chart. This is the 18 week and this is the 18 month. And I'd like to see these lines come together a little bit more. And maybe this needs to actually have a little bit more of a complex pullback. We have a down move and now a rally. If we make a lower low, then we've got that ABC, and it allows time for this the two 18s to actually catch up with one another, close in the gap a little bit. SQM. So I really like what's going on the weekly chart. I mean, this is sort of the classic pattern where the 18 has crossed down below the 40. We have an ABC corrective pattern with a zero line reversal and low ADX. So I like the looks of that. What's bothering me about this is the monthly, because if you look at the monthly, we've got a peak up here in the low 60s, another one in the low 60s, and then another one just above 60. And while we've pulled back and we've got pretty good characteristics to the pullback and the setup, I'm just sort of questioning the upside potential. So I think you could play this probably more for a trade. And, I would be looking for a target up in that low 60s. Now, you could do it as a probe pattern where you're buying here and then the hopes that it's going to break out. But if you do that, you probably want to play a little bit smaller. Anyway, that's kind of how I'm seeing this. It's just the problem area up in the low to mid 60s. Now, Toll Brothers had a nice breakout on the monthly chart. It's still got good characteristics overall when I look at the pattern. But what I'd like to see take place here is, again, another one where we're kind of coming up without spending enough time in the corrective pattern. So I'd like to see this come back down, maybe go sideways. It doesn't have to make a lower low. So I'm not necessarily saying that this has to come down and make a lower low, but I'd like to see at least a sideways sort of zigzag, something like that, that allows these moving averages to come together a little bit more, allows the MACD to maybe come down a little bit closer to the zero line. It's just odds are against this just going straight to a new high right now. Like I said, it doesn't mean it can't happen. It's sort of a lower probability play, and I don't like it from a risk reward standpoint buying it here. Just because I know, just based on the way this is set up, you've got some risk of more consolidation. Now, Riot blockchain. So this actually has really good look to it. When you look at the monthly, we had this big move to the upside. It had a little bit of a spike at the prior high and a little bit more velocity to the downside on the pullback than I prefer, but the volume action is good. The momentum characteristics are good. The weekly chart has now spent enough time in a correction to allow the 18 and the 40 to come together. It has also spent enough time to allow the MACD to come back down to the zero line, and we've spent several weeks below the ADX below the 25 line. So those are all good characteristics. Now we have a low ADX condition on the daily chart, and you can see pretty clearly we broke down from 40 and then failed at 40, and now if we can get through 40, and I would prefer it to be a big green bar to the upside to kind of kick things off in this low ADX pattern, but that's really what I would be looking for here. Pretty attractive overall. Definitely one to keep an eye on. So Micron is going through this same process. We've got a simple pullback. So this is just a simple pullback. And I would view this more like an ABC, or what I would consider to be more like a corrective wave on this time frame. We have a bear alert, but we don't have bear confirmed to the downside. And that's sort of easy to see because the 18 and the 40 just crossed down below, and the 40 is still rising right now. And we definitely don't have two lower highs and two lower lows yet, at least based on the way I would read it. So we're coming into some support on the longer term time frame here. And so now I'd be going to the lower time frame and doing what we were discussing, which is break the trend line and then look for a higher bottom and look for improving momentum characteristics as this is taking place. And if you get that, then I think we have the start of a new leg on this time frame, this monthly chart, starting a new leg to the upside. That's what we want to watch for now going forward. So Disney, another stock. So a lot of these requests, we've got pullback patterns taking place. Look at the zero line pattern developing with the MACD and low ADX. We still are kind of hovering above the breakout area, and support is not that close by. But I like the overall pattern on the monthly chart. The fact that we've been moving sideways now for several weeks means we have a low ADX condition on the daily. And again, we're looking for a breakout pattern here. It's not necessarily this, what I was showing at the break of the downtrend line and then a test. And actually, let's look at that. If we look at that as a break of the downtrend, and now we've got a test to the low, well, if we want to look at a breakout to the upside, we kind of want to look at this taking out these highs now. So I would still be looking for this to get above these two prior peaks. And I would think that would signal the sign that we're getting started in a new leg to the upside. So overall, I like the way this has been developing, but the fact that this reversed on good news here, this was good news. This had really good earnings on this gap up. And the fact that it reversed just tells me that it's not really ready to go quite yet. I would wait for, again, this to be overcome with some strong price action. SMAR, so this is a little bit different in that we went through the corrective pattern. So if I look at this, I come down, we did this, we did that. That's the ABC decline. And then we actually made a pretty strong move to the upside. And now we've pulled back. And we had a nice pinch play with the green line holding above the red in terms of showing that the buyers are still in command even though they're below 25. And that kicks off the new move to the upside. So I kind of like the looks of this. Now, I would expect some resistance at this prior peak because it was such a sharp decline from that high. So you want to expect some resistance up there in the mid to high 80s. That's what I would be expecting. But this is a pretty attractive pattern at this point. Well, look at a gold stock now. Haven't had any requests for gold in quite a while, so this is interesting. But notice what's taken place. It tried to get going on the monthly chart and then it quickly reversed after hitting a new high. And it had one of these patterns that I think is important to recognize. We're at a prior peak. We go up, we pull back, and then when it tried to break out, you had a big green bar followed by a big red bar. And when I see that, I'm just thinking there's a lot of resistance up there. I'm not interested in this pattern right now because there's just way too much of a problem area based on the way the sellers took over. And so now we've got this sort of sloppy price action. We're coming into support in the low mid 50 area. Probably not a significant amount of downside here. I just question how long this is going to take before it's ready to get going because it's definitely done a little bit of damage to the trend right now. Let's look at CROX. So I know I get some questions on whether to use a log chart or not. And the way I do things, you can see this monster move in CROX on the monthly chart. What I do on the weekly is if a stock is making an accelerated move like that, if you look at it on a log chart, it actually looks pretty normalized. But I actually like to see this type of vertical price action. And the way I handle this is I actually use acceleration trend lines. So I'll draw a trend line like this where I'm connecting these lows here and then you can see it held. And now we've made a higher bottom and then we started to accelerate. So I'm going to draw a new trend line up like this. And then if this it looks like it's consolidating, and then let's say this goes to a new high, then I'm going to draw another acceleration trend line. And so a lot of times you'll get at least 3 or 4 accelerated trend lines in a pattern like this before it ends. But you want to know, I like to know that we're moving from a sequential wave pattern into an accelerated mode. And when you get into that accelerated pattern, I think you want to be a little bit more aggressive with your stops. So that's my reasoning for why I like to use this type of a arithmetic scale, simply because I like to see that if we're doing this in price on an arithmetic scale, and then all of a sudden we do that, I'm going to kind of adjust my thinking. If you look at it on a log scale, it kind of all looks the same, really. And so I actually want to see the difference between a sequential wave and a surging market. So that's my reasoning. I wanted to explain that real quick. It's perfectly fine if you want to use the log chart. A lot of people do it. I actually like doing it on the really super mega long-term trends. So if I'm looking at a chart that's going back more than 10 years, especially the ones that have a lot of history, if you go back 20 or 30 years, I do like to look at a monthly chart on a log scale. I think it's giving you a much better idea. But when I'm doing it for a weekly chart, 2 to 3 years out, this is the way I like to do the trend lines. I think it's really useful that way. Let's look at DocuSign. So I do want to keep referencing things. So if we go back and talk about what happened in ServiceNow, remember the discussion we had about the ABC decline and the fact that there was histogram divergence, right? And we have this trend line break here with the big green bar. I mean, this is very similar to what was taking place. Look at the pullback here to the 18-month with good momentum conditions. I mean, very similar pattern to what was taking place in ServiceNow. We want to be able to see this and go back through, look for these instances because you want to know and be able to take advantage of where the buying opportunities are. This had an undercut and rally, and then the gap up here, this big bar here was the trigger to get in. Now we've kind of made an accelerated move. We're consolidating. I actually like the way this is consolidating, but it might spend one more time doing another check back before it's ready to go. But either way, I like the looks of this. It's just, it's made a little bit of a run. The next target on this is around 320. I could definitely see that making a move after a little bit more of a pause. I would definitely think that's in the realm of possibility here. Let's look at FTCH. Another pullback. Now we've come into the zone on the weekly chart. Right here, we came into the zone between the 18 and the 40. Right after the 18 crossed down, we come into the zone, and now we've come back to test. So this is a corrective pattern. We've got a little bit of an overrun on the weekly chart, MACD, but we're sitting on the 18-month line. So this is a stock I'm definitely interested in. It's just the fact that this is a little bit more complex in the way it's developed. I think we need a little bit more information on the daily chart. We want a little bit more confirmation, I should say. I want to see green DI. Right now, we've got red DI in control, and notice how strong the ADX is on this time frame. Before I'm interested in playing this, I want to see this move up and maybe, break a trend line or something like that. And I want to see green DI cross up above red, take out this prior high or something like that, and then hold on a pullback and then show that we really have confirmation that the buyers are triggering in. And if that's happening, the MACD is probably getting back above the zero line. These are the types of things you want to look for on the lower time frame, the smaller time frame, the trigger time frame, to get you in on this trade. This is potentially going to be set up. Now, it might just keep going to the downside, and if it takes out these lows, I would view that as a bear confirmed pattern on the weekly, and it would sort of take it off the realm of possibility for me. I would take this off my watch list if it takes out these lows. We have run out of time. Thanks for watching. My contact information is listed. If you have any questions or comments, please feel free to send them to stocktalk@stockcharts.com and send your requests along as well. Have a great rest of your week, and we'll see you next time. Thanks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.